Okay, welcome to the deep dive.
Hey there.
Today, we are plunging into something really specific, but I think pretty fascinating. It's a financial maneuver by Strategy, the company formerly known as MicroStrategy.
Right, the company that's become almost, synonymous with corporations holding Bitcoin.
Exactly. And we're going to unpack their latest plan. They're looking to raise a significant chunk of money.
And it's specifically, explicitly to buy more Bitcoin. That's the key part.
It really is. So our mission for this deep dive is pretty straightforward. We want to pull out the core details of this strategy.
Understand the investment vehicle they're using this time around.
Yep. Put it in context of that, frankly, staggering Bitcoin hoard they already have.
And then figure out what it all means, right? Why should you actually care that a company is issuing preferred stock just to buy crypto?
Exactly. Let's dive in.
Let's do it.
Okay. So first, let's just establish Strategy's place in the Bitcoin world. Because, honestly, they're not just a player.
Oh, definitely not. They're like a major gravitational force. If you look at publicly traded companies holding Bitcoin, they are the undisputed heavyweight.
The numbers are just wild.
Mm-hmm.
The source puts them at holding 580,955 Bitcoin.
580,000. It's hard to even picture.
Right. And at the time this info came out, that was worth over $61.7 billion with a B.
Billion. And to really drive home how dominant they are.
Yeah.
Their holdings are more than double the combined total of all the other 117 publicly traded companies mentioned that hold Bitcoin.
Wow. Double everyone else combined.
They're just operating on a different level.
And of course, the architect behind this, the main driver, has been Michael Saylor.
Absolutely. Their executive chairman. He's been very, very vocal about this strategy, making Bitcoin a primary treasury asset.
For a public company, which was, pretty revolutionary when they started.
It really was. And despite having this colossal stack already,
They're not stopping.
nope. This new move is all about getting capital to add even more.
Okay, so that brings us right to the core of it. This mechanism they're using for the latest capital raise, what is it?
So they're looking to bring in $250 million.
Right. $250 million.
And the specific way they're doing it this time is through a new class of perpetual preferred stock.
Perpetual preferred stock. Okay, that sounds a bit like a mouthful, maybe a bit old school finance compared to crypto.
It does have that feel, doesn't it? But let's break down the specifics of this offering.
Please do.
Okay, so they plan to issue 2.5 million shares
2.5 million share.
of something they've specifically named their 10% Series A Perpetual Stride preferred stock.
10% Series A Perpetual Stride preferred stock.
Okay, and the ticker is STRD, I think.
That's it, STRD. So 2.5 million shares priced at $100 per share.
Which maths out perfectly to the $250 million target. Simple enough there.
Right.
So who can buy this? Is this open to, retail investors? You or me?
Not really in the broad sense. The offering is targeted. It's available to institutional investors.
Okay, the big players. And also, interestingly, selective non-institutional investors. So not just anyone. They're picking a specific pool, sophisticated buyers.
Got it. Okay, now the why, the purpose. Where's this $250 million actually going?
Well, it's stated pretty clearly in the materials. The proceeds are intended for two things:
Which are?
acquiring additional Bitcoin and general corporate working capital.
Okay, but given their whole identity now.
Yeah, the emphasis, you have to assume, is really on the Bitcoin side. The working capital feels more like, standard language.
Makes sense. And didn't the reporting give an estimate of how much Bitcoin that could buy?
It did, yeah. Based on the price at the time the article was written, which was cited around $106,325 per BTC,
Okay.
that $250 million could potentially let them scoop up roughly another 2,351.8 Bitcoin.
So adding another couple thousand coins to that already massive pile.
Exactly. Not insignificant.
Definitely not. Okay, let's dig into this specific stock then, STRD, Perpetual Preferred Stock. We kind of get the general idea, but you mentioned specifics. What's unique about this one?
Right. So generally speaking, perpetual preferred stock, like the name suggests, doesn't have a maturity date. It's perpetual.
Right, this just keeps going.
And it's designed to pay fixed dividends, often indefinitely. And it usually ranks higher than common stock if the company pays dividends or, crucially, if it liquidates.
Okay, so it sort of sits between bonds and common stock in the capital structure. More priority than common, less than debt.
That's a good way to think about it, kind of hybrid. But yeah, Strategy's STRD has some really key features we need to highlight.
Okay, what are they?
This is crucial. Holders are eligible to receive that 10% annual dividend. It would be paid quarterly in cash, But
And there's always a but.
there is. It's only if declared by Strategy's board or a designated committee.
If declared. So it's not automatic. It's not guaranteed like a bond payment.
Exactly. The board has discretion. It's not an absolute obligation.
That's a really big difference.
It is. And there's another critical piece here. The dividends are non-cumulative.
Non-cumulative. Okay, what does that mean in practice for someone holding this stock?
It means if the board decides not to declare or pay a dividend in a particular quarter,
Yeah.
that missed payment is just gone forever. It doesn't accumulate. It doesn't pile up as something the company owes later.
Wow. Okay. So unlike some preferred stocks where if they miss payments, they have to catch you up later before paying common stockholders.
Correct.
Here, if they skip it, you just don't get that money. Ever.
That's the deal. If they do declare and pay, the plan is for those quarterly payments to start rolling out on September 30, 2025.
Okay, 2025. Got it. And what about getting your money back? Does the source mention anything about redemption or repurchase?
It does. There are a couple of scenarios. Strategy itself has the option to redeem, basically buy back all the outstanding STRD shares.
When can they do that?
If the amount still out there drops below 25% of what they originally issued, so if most of it has somehow already been retired.
Okay. And what about the investors? Can they force a repurchase?
Yes, holders can require Strategy to repurchase their shares for cash, but only if what the source calls a fundamental change happens to the company.
Okay. And in either case, redemption by the company or repurchase triggered by a fundamental change? What's the price?
It's set at the original $100 liquidation preference per share, plus any dividends that have actually been declared but just haven't been paid out yet.
Got it. So you get your principal back plus any declared but unpaid dividends.
Precisely.
So this perpetual preferred stock, it's definitely a different tool for them, isn't it? Compared to how they've funded the Bitcoin buys up to now.
Oh, for sure. The reporting explicitly notes this adds a new fundraising tool to their arsenal.
Right, because before, the main ways we saw them raising money for Bitcoin were
primarily issuing common stock, just selling more shares of Strategy itself, diluting existing shareholders to some extent, and issuing convertible notes, which is essentially debt, but debt that can, under certain conditions, be converted into common stock later on.
Okay, so common stock, convertible debt, and now perpetual preferred stock.
Exactly. It slots into a different risk-returned category, a different place in their overall capital structure. It's likely aimed at attracting a different kind of investor, someone looking for potential income but maybe less sensitive to dilution than a common shareholder, or with different risk tolerance than a note holder.
That's a really important point. It's not just that they're raising money, but how they're doing it and who they might be targeting.
Right.
And naturally, the big Wall Street firms are involved in making this happen.
Oh, yeah. Standard procedure for a public offering like this. The banks managing the sale include some heavy hitters: Barclays, Morgan Stanley, Moelis & Company, TD Securities.
Right. And then some investment firms supporting it, too, like the Benchmark Company and Amerivet Securities.
Yep, the whole financial infrastructure is engaged. And it's all being done under an effective shelf registration statement filed with the SEC.
Shelf registration.
Yeah.
That basically lets them sell securities more easily over time, right? Without a full new filing each time.
Essentially, yeah. It allows them to offer and sell securities periodically up to a certain pre-registered amount, providing more flexibility.
Okay, so let's pull back. We've got the what? Issuing $250 million of this STRD perpetual preferred stock.
Yep.
We know the why, primarily, almost certainly, to buy more Bitcoin, to add to that massive stash.
Correct.
And we've dug into the how, the specific terms, especially that eligible but non-cumulative dividend feature.
A very important detail.
So back to the big question for our listener.
Yeah.
Why should you care about this? Why does this specific corporate finance move matter?
Well, I think it matters because it's just such a clear example, right? You have a publicly traded company operating within the traditional system.
Using established financial tools managed by major banks.
Exactly. And they're using these tools to aggressively chase a strategy centered entirely on an alternative asset, on Bitcoin.
It's not just, a side bet or a small allocation.
Yeah.
It's core to their identity, and they're structuring their financing around it.
Right. It really highlights this fascinating intersection of old school corporate finance and the new world of digital assets.
Yeah.
It shows how committed some players are to their view on assets like Bitcoin.
And how the traditional financial system is perhaps adapting to help make that happen. at least for certain companies.
For sure. And for investors buying this preferred stock, it offers a different kind of exposure to Strategy's Bitcoin focus compared to just buying the common stock. A structured income potential, albeit with those caveats we discussed.
It's really something to see the traditional financial plumbing being used, being adapted maybe for this very specific, very crypto-centric goal.
It really is.
Okay, so let's recap. We've unpacked Strategy's plan. Raise $250 million, issue this specific 10% Series A Perpetual STRD preferred stock ticker, STRD.
With the clear goal of buying more Bitcoin.
Adding to their already immense holdings. We saw how this method, this preferred stock, is a new tool for them, complementing past raises using common stock and convertible notes.
And we really zeroed in on the unique features of the STRD itself, especially that critical detail about the dividend. Eligible, yes, but crucially non-cumulative and dependent on the board saying yes.
That non-cumulative part, tied to the board's discretion. That's a huge factor for anyone thinking about the returns on this security, isn't it?
Absolutely fundamental to understanding what you're buying.
It really is. Which kind of leads us to a final thought, something for you, the listener, to maybe chew on after this deep dive.
Okay.
Strategy's commitment to piling up Bitcoin using whatever financial tools they can seems absolutely undeniable. But by choosing this specific structure, a perpetual preferred stock where the dividends are guaranteed, they're non-cumulative, and totally up to the board.
Yeah.
What does that signal?
What's the trade-off there?
Exactly. What does it tell us about the balance they're trying to strike? Between, on the one hand, attracting investors to give them this $250 million.
And on the other hand, maintaining maximum flexibility to pursue their absolute core corporate mission. Just keep accumulating Bitcoin, perhaps even at the expense of consistent near-term cash returns to these specific preferred investors.
It's an interesting tension, isn't it? Something to ponder about their overall strategy and how they structure these deals.